Okay, so let's have a look at working 7 or adjustment 7 for the 2020 sole trader question S Heighway. So this is your bank statement. So it's telling us that the bank statement is not balancing. So there's 4 errors or discrepancies that they found. Number 1, they found that a credit transfer of 1,000 has been received at the end of the year in respect of a debt of 1,500 previously written off. The debtor agreed to pay the remainder within 2 months. No entry has been made in the books to record this transaction. So there's 3 things we need to do here. Number 1, because the bank received 1,000, we're going to reduce our bank overdraft by 1,000. We're going to create a bad debt recovered of 1,500. And that's additional income that we didn't think we were going to have. So we're going to add that on to our operating income in the profit and loss account. And then the debtor has said that he's going to pay off the rest of the debt within 2 months. So we're going to increase our debtors by 1,500. Second part, a check for 16,500 issued to a supplier had been entered in the books as 15,600. So we're going to find the discrepancy or the difference, which is 900. That's taken 15,600 away from 16,500. That'll give us 900. So we need to reduce our creditors by 900 because we paid them an extra 900. We paid them 16,500, but we only recorded 15,600 in our books. So that means we've paid an extra 900. So we need to reduce our creditors by 900. And if we've paid an extra 900, it means our bank overdraft is going to go up by 900. So we're going to increase our bank overdraft by 900. And then a check for 2,500 issued to a supplier had been returned. This had not been entered in the books. We wrote a check for 2,500 to pay a supplier. That didn't happen. So our supplier, our creditors now go up by 2,500. But because we haven't written that or wrote that check, our bank overdraft will go down. And then a check for advertising of 14,200 has not been presented for payment. So if it hasn't been presented for payment, then we don't need to do anything about it. We're just going to leave it there because no money has come in or out of our bank account. So let's have a look at the first one, the transfer of 1,000 to pay off for debt. So we got our bad debt recovered, which the total amount was for 1,500. So we're just going to create a bad debt recovered for 1,500. Okay, we're going to add that to our operating income in our profit and loss account. Then the amount for our bank overdraft, we'll find it from the trial balance. So go and have a look and see how much our bank is in the trial balance. So our bank is on the credit side, so you know that's an overdraft, 48,800. And then because we received this bad debt of 1,000, it's going to reduce our bank overdraft. So our bank overdraft now is 47,800. And then the difference between this 1,000 and this 1,500, that's how much is left to pay. So our debtors is going to go up by 500. So the difference between 1,500 and 1,000. The debt he still has to pay, he's going to pay, that they're going to pay within 2 months. So we're going to find our debtors 97,500. And then we got the bad debt, 500. So that means that our debtors is now 98,000. And that figure then is going to go into our balance sheet as a current asset. Right, so that's the first adjustment. Second adjustment then, it's saying in the question that we paid our creditors, or a check for 16,500 issued to a supplier had been entered in the books, cash and ledger. So it means we put into the cash book and the ledger as 15,600. So we need to decrease our creditors by 900, but increase our bank overdraft by 900. And the 900 is got by taking the 15,600 away from the 16,500. So we're going to adjust our bank figure by 900. So we have a bank overdraft already, 47,800. We got the check of 900. So our bank overdraft is going to go up by 900. And then we also need to adjust our creditors by 900. So we would have a previous adjustment done with our creditors as part of goods in transit. So the amount that we have for our creditors, 103,900. The check then of 900 is going to reduce that because we would have paid an extra 900 off our creditors. So we need to bring it down to give us 103. So 103,000. And the next adjustment then, a check for 2,500 issued to a supplier has been returned. So that means we need to increase our creditors by 2,500 and we're going to decrease our bank overdraft by 2,500 as well. So we already have an adjustment for our creditors. So the check of 2,500. So because that check bounced or wasn't paid, our creditors are going to go up. So our creditors now 105,500. That's going to go into your balance sheet as a current liability. And then our bank then, so because that check wasn't written, it means that our bank then, bank overdraft then is going to reduce. So your bank overdraft by 2,500. 46,200 then. That's going to be the figure that goes into our balance sheet as a current liability. Okay, so that's the adjustment then for your bank. So remember part one, it was a bad debt recovered. So we created a bad debt recovered of 1,500 that goes into your profit and loss account at operating income. We reduced our bank by 1,000, our bank overdraft by 1,000 because we would have received that amount. And then we increased then the difference between the 1,500 and the 1,000. We increased our debtors because that's the money they said they're going to pay within 2 months. Check then that we sent to a supplier but recorded incorrectly in our own books. So it was an extra 900. So we need to increase our bank overdraft by 900 and decrease our creditors by 900. And then we wrote a check to a supplier. This check was returned. So it means that our creditors have to go up by 2,500, but our bank overdraft will go down by 2,500.